In this session, we'll be looking at some details related to the Australia-China trade and investment relationship. China is far and away Australia's number one trading partner. Currently, China accounts for around about 35% of all of Australia's exports. And this is confined not just to minerals and the energy sector, but also it cuts across manufactured goods, agricultural products, and increasingly services. As we noted earlier, there's a considerable rebalancing and restructuring of the Chinese economy taking place at the moment. China is looking to boost domestic consumption as an important driver of sustained economic growth into the future. This is reflected in the urbanisation program that's continuing apace there in China, the growing incomes, the growing middle class in China, and the changing consumption patterns and dietary habits which are accompanying that. And also it's being seen in the restructuring of the financial sector, the deregulation of financial services and insurance services within the Chinese economy. And this is seen nowhere more clearly than in the new free zone which is being established around the Shanghai region. This will have important implications for capital flows in and out of China, for interest rate deregulation, and for access to the Chinese market by financial service providers from all countries, not just Australia. Clearly, the trade between Australia and China has been growing considerably, particularly over the last 5 to 10 years, not only in exports, but also increasingly China has become an important source of imports for Australia. This has been reinforced in recent years by the very high value of the Australian dollar, but also reflects the comparative advantage of Australia vis-à-vis China, the way the two countries, the two economies complement each other. If we just focus on the major products which are exported to China from Australia, we see that iron ore, coal, gold dominate the story. Agriculture is important, but also if we look at the mix within some of those product areas, so for example, within agriculture, wool and cotton have always been, or for a long time been significant, but increasingly meat, not just beef, but now more and more mutton and lamb are becoming important, oilseed, dairy products, wheat. So there's considerable change within the mix of agricultural products which are going to China. And as alluded to earlier, this is in part a reflection of the changing dietary habits of a rising middle class. If we look at the import side, we see that Australia imports considerable amount of computers and telecommunication equipment. This is not really a reflection of the fact that China is a high-tech exporter, but as we mentioned before, China increasingly is enmeshed with the East Asian economies, an importer of intermediate goods and components which are more high-tech. China does some value-added and some assembly work and then re-exports final goods to third markets. As part of China's restructuring, they're looking increasingly to be involved in more and more of the high-tech end of the production in those areas within China. The soft goods, which are an important aspect of Australia's imports from China, relates to such things as textiles, clothing and footwear, furniture, bedding, toys, sporting and travel goods. If we look at the ranking of China as a trade partner for Australia, we see quite clearly that both for exports and imports of merchandise trade, China ranks number one, taking a sizable share of Australia's total trade. Interestingly, if we look at services trade, we see that China again is number one in terms of an export market. We saw that Australia's exports constitute overall about 17% of total trade, and 11.3% of that goes to China. overall, about 7% or 7.3% of Australia's exports to China are now in services. So this is a growing area of trade, and one that's going to become much more important and of much more significance for Australian companies. When we talk of services, and in particular services which are traded internationally, this covers a very broad spectrum of product areas, ranging from business and legal services, accounting, education, tourism, design and engineering. Many of these products weren't traded 10 or 20 years ago. It's with the advent of the internet, with increased international telecommunications, with the cheapening and greater accessibility of international travel, then all of these services can become more easily traded internationally. I think on the world scene, about 20% of all trade now, all export trade, is in services. If we look at the particular services which are exported to China by Australia, we see that tourism and also education dominate the story. This is not to say that other services aren't important or will become increasingly important, but as a reflection of the situation at present. China currently is Australia's largest source of international students, and we saw that education ranked number 4 in terms of Australia's overall exports. So this is not an insignificant contribution to that particular story. The total number of international students coming to Australia from all sources peaked in 2009 and has fallen away since then to some degree, in part due to the high dollar and also due to some changes in visa arrangements by previous government. These are currently under review, and of course with the Australian dollar coming down, there's potential for a pickup in international student numbers coming into Australia. Certainly the lowering of the dollar will give a further boost also to the tourism industry, which has been hit with the higher value of the Australian currency. UNESCO forecasts that the number of international students globally will rise from an estimated 4 million, that was the case in 2010, to around 7 million by 2020. And most of these are expected to arise out of Asia. And this will be across all education sectors, not just the university and high school sector, but also the TAFE, or vocational education sector, and also in English language or foreign language training. And clearly China will be an important part of this. Just on the tourism side, while China is the second largest source of overseas tourists, China does contribute the highest spending by any group of tourists in Australia. If we look at China's global trade relationships, we see that Australia ranks around about number 11 in terms of China's export destinations, and we rate relatively high in terms of source of imports for China. While at the moment this in part reflects the import of mineral and energy sector products from Australia, as we've noted, increasingly there's opportunity across a range of other areas: manufacturing, agriculture, services. The figure for Hong Kong, again, as noted earlier, is a little bit misleading. A lot of the exports going from China to Hong Kong are being rerouted to third countries. Similarly, statistics show a lot of trade coming into China through Hong Kong. So when you're looking at statistics and trade data in particular, and also investment data, separating out Hong Kong and China can be a little bit problematic. So it's just a problem to be aware of. If we look at the investment links between Australia and China, Again, we see a story of a growing and closer relationship between the two countries. Australia's traditionally been a significant recipient of foreign investment flows. In part, this is due to the gap between domestic savings and the investment needs. Australia has a relatively small population of around 22, 23 million, but is a large continent with large infrastructure and other development investment requirements. Traditionally, investment has come from Europe, from the US, but increasingly we're seeing investment coming from China and from other sources. If we look at the figures for 2011-12, the US was the largest source for proposed investment, followed by the UK, China, Japan and Canada. Looking at the chart, we see that Australia has a forecast strong growth for foreign direct investment inflow. That's the blue line in the chart. The yellow line reflects the outflow of foreign direct investment from Australia. So the expectation by Oxford Economics is that China's or Australia's export or imports of foreign investment capital will continue to grow strongly, and it's likely that China will play an important part in that. The Foreign Investment Review Board, which is organised under the Australian Government, is responsible for approvals of foreign investment coming into Australia. The annual report of this organisation provides some useful information and some interesting reading. The link is provided there to that particular publication, and I've just highlighted some main points from the 2011-2012 report. If you go into that report, there will also be detailed tables on where investment from particular countries is going into what sectors. An interesting thing about the Foreign Investment Review Board is that for investments above a certain threshold, approval is required. Now, in the case of the US, that threshold is 800 million. For other countries, it's around about 100 million or 200 million, the latter figure being for takeover propositions. So clearly, investors from the US have an advantage in the Australian marketplace because the approval process doesn't cut in until investments reach, as I say, greater than 800 million. The reason for that disparity between the US and others is due to the fact that that particular arrangement was part of the negotiation under the US-Australia Free Trade Agreement. Currently, as suggested, there is a free trade agreement under negotiation between China and Australia as well. And the Chinese particularly are viewing this investment threshold as an important point for negotiation. They would like to see it raised. Another aspect of Chinese investment inflow into Australia relates to recent changes to visa policies, and these are picked up in some of our interview discussions, which will be coming to light in the next week or two. Under new visa arrangements, high net worth individuals will be able to invest in Australia in return for some rights with regards to residency, investments above $5 million. Now, this is an important opportunity for Australian businesses to link with these high net worth individuals, not only for opportunities within Australia, but also to leverage that connection to gain entry into the Chinese market. If we look at these figures which came from the Foreign Investment Review Board, we see that the majority of investment coming into Australia, or approved for investment into Australia in 2011-2012, was in mineral exploration and development, but also, interestingly, into real estate. it should be noted also that a lot of the investment in manufacturing is in fact agricultural related. If we look at the source countries, again we see China ranked up highly, and while there's a lot of discussion and comment, particularly in the media, about Chinese investment in Australia, currently China accounts for less than 2% of the total stock of investment in Australia. Historically, as mentioned, investment has come from the US and Europe, and that accumulated investment really dwarfs the total investment to date by China. A couple of interesting things about Chinese foreign direct investment flows. One is the steady growth in terms of the inflow of foreign direct investment into China, and this has been a large source of stimulus to the economy and an important part of the sustained growth of the economy over many years. But increasingly what we're seeing is the increased outflow of investment from China. Now, in large part, in recent years, this has been a reflection of the investment going into the search for long-term, reliable and sustainable flows of energy and related products. But also we're seeing now a broadening out of the interests of Chinese investors. And indeed the Chinese authorities are making it easier now for foreign companies and also individuals to invest overseas. If we look at the next slide, and before we do, just note down the bottom the link to heritage.org. This provides an interactive map which shows some detail on where China's investment is heading and allows us to look at the importance of individual countries. So if you go to that site, you'll see a chart like this, where the red globes represent by size the importance of particular countries or regions for China's overseas investment. And just looking at that, we see that the US and Australia stand out in terms of the relative importance for that investment. And the bar chart on the left is showing the total investment by China to all countries over the period since 2005. Each of those small blocks represents 6 billion in value. And the charts, or the table on the right, or the chart on the right, reflects where and in what sectors the investment is going. Now it's possible just to click on individual countries, click on the red dots, and it will give you information related to individual countries. So if we go to the next slide, this is having clicked on the Australia red dot, and we see now the details for Chinese investment in Australia over the period since 2005, both in terms of the level of investment on the left and where the investment is going on the right. So this is quite a useful and informative site which people can spend some time looking at. This slide highlights some databases which are available and freely accessible for those that are interested. The different databases provide some different observations. The UNCTAD, United Nations website listed at the top, provides a range of indicators for many different countries on trade, investment and many other socio-demographic factors. The data bank from the World Bank provides a lot of World Development Index features. The WITS, World International Trade and Services database, is also a World Bank database, and that is freely accessible, although with that particular database users need to register initially when they go on. So to give you an indication, when you log on to the UNCTAD page, it comes up as such. And if you look on the right-hand side, there's a catalogue of indicators, international trade, economic trends, and so forth. It's a matter of clicking on that and going into the database where you can identify particular countries, particular years. You can develop time series of data and particular categories of products of interest. Similarly, if you go into the World Bank database, this is the World Development Indicators, WDI database. Again, you can look at individual countries and follow through and develop a number of series in a range of areas. And these, as with the other databases, can be downloaded into Excel format. There's a number of important and easily accessible sites which provide background information in doing business, particularly in China, and also some of these sites provide information of relevance for Chinese companies looking to link up with Australian companies or wishing to do business in the Australian system. This particular link from the Australia Chamber of Commerce, AustCham, which is, has several offices across China, will be interviewing a member of AustCham based in Beijing in a later session. This particular link provides some facts about the etiquette in dealing with Chinese business people and Chinese individuals, some aspects of the legal system, the government, and so on. So, for example, some guidelines, some information about doing your research, business etiquette. Another organisation, which is a government organisation, Austrade, again, that provides considerable information related to the market. If we look particularly at this site, it provides a lot of information on doing business, market profiles, and so forth. Some of the industry organisations which are important sources of information: AustCham, as mentioned, the Western Australian Chinese Chamber of Commerce. The key figure there will be interviewed in one of our sessions. The Australia-China Business Council, again, a person from there will be interviewed in a later session. These are important organisations, not only for networking opportunities, but also they provide a raft of material and background information, some of which is listed within the general discussion, and some of which is provided in the resources list each week. So certainly there's considerable opportunity to build on the existing relationship. The relationship as it stands at the moment is certainly a very strong and a very sound one. And so next week we'll be exploring in a little bit more detail on where some of these opportunities may exist in exporting and importing opportunities between the two partners. And then in following weeks we'll be looking at the investment opportunities. And clearly, as mentioned today, the investment and export-import opportunities are linked. So, for example, investors coming into Australia from China may be looking to hook up with a local partner and then exporting back into the Chinese market. So there is obviously a clear link between the two, but next week we'll be focusing specifically on export opportunities both into China and also into Australia for Chinese enterprises.